Hi there and welcome back to the Metaverse Stock Exchange. In this video, I'm going to go over what I think will be happening this Tuesday with the CPI report and why I believe it will be a huge market moving event. But before getting into the January report, let's get to the huge news of the December report. As you already know, if you don't know, in December it was the first month where we got disinflation, meaning the headline number, consumer price index CPI, month over month, had a negative number by just 1/10 of 1%, but it was huge for the news cycle that finally we see prices going down. But now, just days before we get the January report, it ends up that that really wasn't true and it was pretty much a lie. Today, which is Saturday, I believe this came in late Friday, just 3 days before Tuesday when we were getting the new report. We're seeing a revisement higher to the December report. So going from the minus 1/10 of 1% to now plus 1/10 of 1%. Now that's not a huge revision, but it is huge because it defeats the narrative in the entire news cycle that prices were finally going lower. And this is very important because I'm going to go into now the entire kind of December report, because this is the December report, and see why this number going from negative to positive is very important for what we're expecting now in the new report, and why I believe that the market will not take it in a good way and it could be a huge market move to the to the downside. But keep in mind, again, the breaking news is that inflation, there is no discount, but we have inflation. So now let's see. This is the old report. I don't have the revised report yet. That's not posted. So we're going to have the old report with the old numbers. In this report, we have to keep in mind that energy was a huge drag. So in the month of December, pretty much the entire energy sector fell by 4.5%. Keep in mind that energy has a big weight on the overall index. Why is this important? It's important because energy prices bottomed in the month of December. So this is retail gas prices. And what you can see, they were at pretty much around $3.2 per gallon, again, on average in the middle of the month. If we look at what was the average in the middle of the month in January, which is where most of this data is getting from. So the second week of the month is when the most of the data is being collected. We're going to see that not only did we not have a decline, but we had a pretty steep increase in prices, again, compared to on a month-over-month level. So now in the next report, we should be seeing these this drag down be a drag up, meaning, a push up. So all those numbers, the energy sector will be pushing up prices higher. And that's why I believe even in the expectations, we have expectations for January for the core CPI to be 0.4% higher, and then the headline number as well 0.4% higher. That being said, even if we take those estimates, that will still be inflation going higher, meaning that we do not see disinflation, we do not even see it destabilization, but prices will be continuing to go higher, and that is a huge red flag. Now, to the kind of most important thing that the Fed Chair Powell said, let's look at services ex shelter. So Fed Chair Powell said that prices in commodities and in goods were falling, and that is correct. But keep in mind, again, we're going to see how food prices react in the month of January, because as we know, food prices have been on the uptick in the past, let's say, period. But energy, so food will be either stable or maybe going a little bit higher. Energy, as I said, will definitely be going higher. So the goods side in the energy side is definitely going higher. Now let's look at services. Services has been pretty high for the last couple of months, and especially shelter. So now we expect shelter to be lower. So this is shelter right here, the third from the bottom. As you can see, we had 0.8, 0.6, and 0.8%. According to the Fed Chair, and according to the latest, at least rental prices, we should see these numbers falling later in the year, but we're not really expecting that to happen this month. But let's give it that we should be seeing at least a lower number than this 0.8%. But as the Fitcher said, he is going to be looking at services X shelter. And the biggest part of services X shelter is transportation services and medical services. Now, if you compare transportation services, and I urge you to do even more background on this, but what you're going to see that they are very correlated to energy prices. As you're going to see in this report, there's only 1 month where there is a difference, but in the other months, if energy prices are going higher, transportation prices are going higher. And also when energy prices are going lower, transportation prices are either going lower or they're pretty much flat, which was the case for last month. But now, as I said, we know that we're going to be getting energy prices going higher, which means that there is a big possibility that transportation services prices will be going higher. And this is also supported by freight data, showing that the freight market at least has a little bit ticked up higher. And now we get to the medical care services, which for very unusual reasons was down in the months of October and November. Very, very big surprises to the downside. Normally, as you can see, it goes higher and it goes higher by a wide margin. But for some reason, and I really don't know why this was, for 2 months we had huge declines. But in the month of December, we saw that reverse and then go now up by 0.1%. I believe that there is a lot of evidence, let's put it like that people are going back to kind of going to medical care, to surgery, doing surgeries and doing all the things that were not done during the period of the pandemic, right? And I do believe that medical care services should be going higher because they really didn't ran up as much as other parts of the economy. And this, as I said, has a big weight. Plus, we no longer see this downtrend, but we see a little bit of an uptick. So if we have medical care services either flat or going higher, transportation probably flat or going higher, energy going higher, used car prices, I checked the numbers, they're pretty much exactly the same. If you want to check, what I do is I check the used car index on Car Gurus. That's my kind of barometer for the used car market, at least, and that was a negative 1.9%, which is the same exact number as in the month of December. So I believe that used cars and new car prices will be pretty much with the same effect that were in this report. So there will not be very significant changes. Again, looking at the data that is available to us. But all the other pieces of this, which again includes energy, transportation, medical services, shelter, I do expect a number lower than the 0.8% because this was a very high month over month kind of increase. So that should have a little bit of a kind of push downwards, but still, that is why I believe many economists, I think, do the same math and see that we should be expecting inflation, at least by the overall estimates here, going up by 0.4% on the headline and the core. But I believe with this revisement here that they have this at least looking to the downside, meaning that we can see a surprise to the upside, especially now with the revisement. Before that, I could say that 0.4% was okay, probably in the middle of the range. But now, when we see even prices going higher in December, I believe that we can say the prices are probably going much higher in the month of January. And even if we get these price hikes by 0.4%, I believe that that will be taken as a kind of bearish signal that inflation is not really slowing down, especially if we see the uptick in these two core sectors, which, as the Fed chair said, we need to look at services X shelter. And this is where the numbers are. And if I'm correct that they're correlated, transportation services with energy, and that going higher, and then medical care services kind of going on the uptick because realistically, they are underpriced compared to where other prices in the economy have gone, and they have had already a couple of months of big declines, then we should see big increases here, or at least Let's not over exaggerate and said that we should see increases here. And if all of that ends up happening, that could have a huge market moving event. Pretty much that inflation is not going away, that the Fed will be here. I believe in the past couple of days on Thursday and Friday, the 2 year and the 10-year note were increasing by a substantial margin, just because I believe the market is kind of anticipating this to happen and the Fed to continue raising rates. And that is why I believe this is hugely important, and you should definitely watch this video and make your own kind of math and check those numbers to make sure that what I'm saying is correct, and hopefully be prepared if you're in the market or if you're thinking of investing. Just have this news before Tuesday morning. Thank you so much for watching, and see you in the next video.